Okay, let's have a look at the euro for the 8th of December. A very subdued start to Europe. Frankfurt, London, the first 2 hours were merely 28 pips, so not a lot on offer. Frankfurt started with a bit of a bang, but I didn't have an entry order on the base of that channel through there and missed that run. Okay, this sideways drift back was and remains difficult to assess a central point. So at what point do you say there's a 50% through there? Now, easy in past tense when the market has already formed and you look at the overall move and that pullback, there's your entry trade. If you were confident in the build-up of pressure, which I wasn't, but there's your first trigger. Unfortunately, I didn't take it, and if I had taken it, I would have gone to break even with a lackluster push, and that wick would have taken me out. The only other trigger that you could have possibly taken was a very aggressive micro channel, so CV click. So when it pulled back through to here, pulled back to the 50% mark and went back to the top, you could have taken that as a trigger, a very aggressive one, but you're only expecting a less than 2.5 pips in the bounce, so it's a dangerous trade depending on your brokerage. I use an ECN broker. My average costs to take a trade are about 0.6 to 0.7 of a pip with spread and commission. So having such a light cost, I can take tight triggers, but this one is a little tight for my liking. Okay, frustrating when the market does run and you have nothing in it. Not that it's a strong run, but it still moves up. Okay, once again, we're looking from this move, we're looking somewhere in that zone to that zone. Okay, so we're waiting for it to bounce up in that area. Then we look at the last channel. Okay, so that's your first trade. And first trade with any confidence that you're going to get a reasonable bounce. That's only a 10 pip channel, not particularly exciting for London, a bit below the norm, but first trade there. Okay, let's assess our take profit. At this point, your enthusiastic reference should be avoided. So obviously, if it was a vibrant move, we'd be looking at something from there to there. Now, initially it starts off and looks good, and this pullback here resettles your mind to a more reliable take profit point. Now, you could take profit on that low just because of the time and power of that retracement, but there's your ideal take profit through there, which is 25.5. So say 24 pips for the first move. Not a lot on offer. I took a short through that high. So entry order here, activated by this wick, and let's see, click. Okay, there's the last channel. This move agrees, or this bounce point here agrees with that last channel's bounce point. So there's your take profit, which is another 24.5 pips, so 23 pips for that one, 47 pips for the first part of the session. If you were keen, nothing in this would have made me particularly keen. There's a double tap there, and a lackluster move up. It's a drifty night, as you can see. That C-click, C-click, that high, CV click. You'd be taking profit somewhere between there and there, depending on the level of patience you're willing to give a drifting market. But that is an additional 23.5, so 22 pips if you stuck around a bit longer in the session. I'll just have a quick look at what New York did. Okay, a little bit more action through the crossover of New York to the close of London. This is the close of Frankfurt. This is the close of London. A pretty lackluster night, but no harm, no foul. We get what the market gives us. I hope you caught a bit more than the 47 pips on offer, and I will come back tomorrow. Good luck with your trading.